Sensex 2 down about 1.5 odd points. A bit of a recovery from about close to 440 odd points lower. Now Sensex is down by 400 odd points, and we are seeing it moving slightly higher. But what's really happening in China, though we understand that the trading there has now been suspended, Chinese markets are down 7%. Shanghai Shenzhen on your screen is about 7% lower. Shanghai Composite also lower by 6.85%. And to understand what's happening and what's really taking the market lower, what's impacting the sentiment there, we are now joined by Hans Goetti, Head of Investment Asia at Banque Internationale A Luxembourg, who's joining us on the phone line. Thank you very much, Hans, for being with us here on NDTV Profit. It's good to have you on the show today. Can you tell us what's happening in the Chinese markets? First trading session of the year 2016 and a crack of almost 7%.
Well, certainly not a good start to the year, that's for sure. Some of the manufacturing numbers that came out of China were below expectations, although I find that is a relatively thin excuse for what's happening. I think what we're looking at here is sentiment, which is very negative, and sometimes it feeds on itself. Having said that, one should not throw the baby out with the bathwater, because the Chinese economy may be slowing on the manufacturing side, but on the services side, it's still doing well. So all is not bad there.
Clearly well out there as far as China is concerned. But when the markets really open in the morning, Hans, that time, markets were down almost 1 to 2 odd %. But this sudden, sell-off that we saw, what would you really attribute this to? More panic among the investors out there, or a realization that probably there is a lot of weakness, much more than it is being presented once again?
Sometimes if sentiment deteriorates, it does not take much for everything to go down. I would not read too much into it. Yes, of course, it's not a good start to the year, but I think over the next few days we'll probably put everything more or less into perspective. I think the markets in general are very nervous. We see globally a move towards risk off right now again. I mean, you see this reflected in the currency markets, or you see the strong yen, which is usually a sign that it's a risk off move. So, I think it's more sentiment, more of a question of sentiment rather than fundamentals.
Right, more sentiment than fundamental issue out here. Then what do you expect from the European markets and the US markets going forward? How do you see them opening now?
Well, I think what we see as a key theme for 2016 is the monetary policy divergences between the Fed on one hand and basically everybody else. So I think that will be a key theme. As far as the U.S. is concerned, the economy is doing okay. I think there's justification for the Fed to raise rates. So we would expect the market to move in line with earnings. So not much of a price earnings expansion. Europe, on the other hand, is a bit cheap, but Europe has good dividend yields. It is more attractive valuation-wise on a price-earnings basis than the U.S., so we prefer Europe over the U.S. But again, in the very near term, you may see some negative sentiment spilling over, but it should be relatively short-lived in our view.